Let's get into some market news now. An energy company suffered their further losses this morning following a collapse in oil prices while most Asian markets fell. But with the sharp losses witnessed in the morning being tempered, Nissan recovered marginally after France and Japan sought to reassure on the future of its tie-up with Renault following the arrest of head Carlos Ghosn on Monday. Although Mitsubishi extended its drop. While investors in all sectors were essentially in selling mode of late, firms linked to the oil industry are among the worst hit as the price of crude continues to plunge and concern about demand and high production. Broader markets were mostly negative, but some managed to claw into positive territory as Tokyo's Nikkei dipped 0.4% to 21,507 points. The Hang Seng gaining 0.5% to end the day at 25,971. The Shanghai Composite edging up 0.2 to 2,651 points. Over the United States, stocks sold off for a second day on Tuesday as energy shares dropped, with oil prices and retailers including Target and Coal tumbling after weak earnings and forecasts fueling worries about economic growth. Markets are now officially negative for the year as the Dow Jones Industrial fell over 2.2% to 24,465 points. The S&P 500 was down 1.8% as well, that to 2,641 points, while the Nasdaq Composite joined the decline, losing 1.7% to 6,908. Well, as you can tell, a sense of negativity coming through ever so slightly. Although the market turning down for the year out in the United States does mean that there's a lot of pressure on the rest of the globe to make some headway. Whether it will be able to do so is clearly something for speculators and investors to make sure of. But for now, let's unpack just exactly how the local and European markets are performing. Michael Traherne, Portfolio Manager at Vestec Asset Management, joining us as we unpack the markets a little bit more. Michael, thank you so much for the time. Let's, I suppose, start things off with just the general sense of the market today. Slightly down, but pretty much flat and a lot more unmoved than anything else. Naspers, of course, in the green, but it seems that the market is a little bit mixed today.
Yeah, really a mixed market. That's after having a horrible day yesterday. And global markets having a horrible day on Monday, so it's good to see we're only down slightly today. It is worth pointing out that tomorrow is a public holiday in the US, and Friday is a half day trading for them, so it is quiet for the long weekend globally because US investors are on holiday.
I doubt it's even going to be a half day.
General negativity all around.
I doubt it's even going to be a half day considering Black Friday coming around the corner as well, so things are about to get hectic. How much does that impact? How much do the likes of Black Friday, the likes of Cyber Monday affect market trade?
Yeah, not much on markets. Obviously, because of most people taking a long weekend, there's a volume difference. But these numbers, you'll only really see them come through in these retailers' figures in another 3 to 4 months when they report on the current quarter's numbers. And obviously, from a South African perspective, Black Friday is starting to take off, and it'll be interesting to see how that comes through in the retail numbers for November. Last year's retail numbers for November were significantly higher because of Black Friday. Do we have this boost going into Christmas? We'll have to wait and see.
Yeah, some of the banks locally saying that this could possibly be the biggest Black Friday for South Africa ever. So it is going to be keen to watch that, and hopefully a lot more clearer when it comes to numbers. Let's unpack as well the United States. They saw the Dow go down more than 2% yesterday. It was a big fall on their front as well. Even the Nasdaq and all the other markets there too, the S&P 500. What is actually ticking this down? It's not just the tech stocks anymore.
Yeah, so US markets now officially in the red for the year. It is worth pointing out that the markets were lower in February than they are now, so we're not at a 12-month low. But it's just general negativity around, and it's one person selling leads to another person selling, and then you have this cascading event where everyone's just selling. There's a lack of positive news. And they're not helped by the Nissan, Renault, Mitsubishi issues that you were talking about earlier. There's just negativity around, and that just feeds into market prices. But when we do get something positive that comes through, I'm fairly sure the market turns again.
Yeah, here's something that's also fallen quite cascadingly, if you want to call it that. That's the price of oil as well. More than 7% drop yesterday.
Amazing news for consumers. Down 7%, and that's after Donald Trump came out and said he's supporting Saudi Arabia regardless of what the CIA says. And that's just a signal to the world that the US isn't going to react against Saudi Arabia, and oil supply is going to continue for the taps to be open. Iranian sanctions letting through more oil than originally was anticipated. The US has given concessions to China, Japan, and India, three of the largest economies, to continue to buy oil from Iran. So there's just too much supply at the moment, and as a consumer, that's great news.
Yeah, trading just around $64 a barrel there. That's for the price of oil. Take a look at the rand as well now. 13.96 as it sits behind you there, Michael. It's a fairly positive move, but is it really rand strength, or is it dollar weakness, or is it just a market not sure where to go right now?
Yeah, it's been hovering around this 14 level, and generally when it hovers around this level, there's not much news that moves it, and it'll bounce between 13.19 and about 14.10. So I wouldn't say I'm surprised. There did seem to be a positive reaction from the rand when our CPI numbers came out, and maybe that's the market saying, yes, we don't think there's going to be an interest rate hike tomorrow. Well, that's at least what I think.
So you reckon no interest rate hike? It goes up to 5.1%. Remember that, of course, they don't necessarily look at this, but this becomes a starting point for the next 18 months when you take a look at inflation and CPI. Probably, one of the biggest outliers here was more petrol than anything else. But you don't reckon there's going to be a hike tomorrow? Let's remember as well that it's back to 6 members for that MPC also.
Yeah, so the main reason that you want to raise interest rates is because you think inflation's gone too high. You think that our currency's weakened too much from a buying perspective. But if you have a look at the CPI number that came out today, cereal and bread, that's cheaper this year than it was last year. Fruit is cheaper, furniture is cheaper, clothing is cheaper. All these things that consumers are buying, they're all cheaper this year than they were last year. So it's not a case of demand push inflation. If you have a look at what's pushing CPI from 4.9 to 5.1, petrol's 22.8% higher this year than it was last year. Water is up over 11% this year, and electricity is up 7.7%. So all these things are not consumer-push things, it's external factors. So as far as the MPC is concerned, it doesn't look like it's demand-push inflation, although there is the temptation that depending on what their forecasts show going forward, at the last meeting, they showed that we were going to break the 6% band in a couple of months, but it was only going to be temporary. Is that still the case? It probably should be the case, especially given how much oil's fallen. Petrol coming down R1.50 next month, and I wouldn't be surprised to see a big drop in January as well. All these things mean lower inflation, no need for interest rate hike.
Yeah, so you reckon standing pat and sort of sitting on their hands on this one and defying the odds, so to call it, especially in a low-growth environment like we have right now?
Yeah, for sure. I mean, I think it is not the general view. We even, I think, had the IMF coming out during this week saying that the MPC needs to act just from a credibility point of view. Yeah. And the reason that you want a central bank that's active is investors want to make sure that whatever country they're investing in, that currency maintains its strength. I mean, you don't want to invest in a country that then has inflation of 20%, because all of a sudden then your investment is worth 20% off the bat. So a strong central bank creates confidence, which creates investment, which creates growth, and that's good for all of us. So that's the argument, but my argument is that all the inflation that we're seeing at the moment has got nothing to do with consumer spending. Let's rather keep interest rates low and drive growth from there.
Makes perfect sense if you ask me, but we'll wait for tomorrow. 3 p.m. is the announcement, of course, when the Governor of the South African Reserve Bank, Lesetja Kganyago, announces what the Monetary Policy Committee has decided with regards to interest rate. We'll have